Hello, hello. Good morning, everyone, and welcome to the Morning Business Brew. Today, we're going to discuss one of the most trending now company, which is BINGO, BIONANO Genomics. Correct. So, I've prepared some little bit of a small research about this company to take you through it. Is it risky? Is it not? And what's happening with the stock? It's when it reached, I think, in Feb like all-time high, and then now it lost like 50% of the whole value in a short term. So I wanted to see, because I saw a lot of people asking about the stock, and is it a buy? Is it a buy now? Because now it's like around $5, 50% from the value around in February. So everybody was thinking maybe it's a bargain, right? So I thought, okay, let's look at this company and see, does it really have value? And at the end of the video, I'm gonna calculate the fair value of this stock right now for the long run, right? All right, so let's start. If you know all about the products, you can skip the video to later on and see where I'm talking about the value itself, like the stock value. If not, so basically they have three main products or income. Okay, it's very limited. So they have the services. So if they do the services in-house, like for analysis and stuff like that, they charge the customers. What they sell also, the Sapphire system, that's the main thing, which is called cost $150,000. And then the third thing that they sell, which is the consumables for the systems and stuff like that. So these are the main products for the company currently. This is the financial statement for the company right now, and as you can see, it's not profitable at all. A matter of fact, in 2020, they saw a lot. They went down in negativity more further, right? So it's reached minus $400 million. So you can see as well that even the revenue, 2018 was the highest. Then 2019 they got a little bit down, and in 2020, of course, they got affected by the pandemic, given that most of the medical labs were closed some way or another, right? Or focusing only on COVID. All right, so I want to discuss first what the analysts, like the general sentiment and the analysts about the stock, talk about or think about the stock. They are expecting to reach a revenue in 2020 by 16 million, which is a huge jump from last year's $8 million, right? So that's a beautiful thing to see, that they're gonna have 100% or 90% increase in revenue in 2021 end, which is really good. This is something positive, right? The next thing is they're expecting to be profitable around 2024. So this means that after 3 years from now, we probably gonna see these guys going into positive cash flow. Let's hope, right? If you want to be or not. Other things, so given these 2 points that we had saw from analysts, I was able to draw a roadmap for the future of this company, revenue and net income wise. And you can see that in 2023, they are expecting to get the highest loss maybe. And then from 2024, they can flip it, given that they're selling more and more. And then they are expecting to reach around $1 billion around 2029, let's say, right? So it's gonna take a long run for this company to turn things around. We in 2020 almost like 30% of their story, so we expect to see very positively feedback by 2028, 2029. We have some really solid numbers, right? What's wrong with the price? What's wrong with the stock price right now? Well, basically, there's a lot of short sellers it got hit by a lot of short sellers. You can see that the stock in March, 30th of March, it was 14% of shares were sellers, right? And when you dig further into the whole industry, you find that the whole industry is being shorted. The whole real science and all this stuff, therapeutics, Sensonic, Nvidia, they're all being hit by short selling, except one company, which is Pacific Bioscience in California, and they basically got less short selling by 6%. This is kind of a really interesting company to view, Pacific Bioscience of California. I'll tell you why. Because all these companies you see in front of you now, and majority of this industry are not profitable yet, except Pacific Bioscience, where they're able to pull out a profit by 2020. So it's really a good stock to look out if you want to target this future industry, right? We know that this industry is still new, right? This industry is still growing and nobody knows what's going to happen and when is going to be the rapid growth happening. So you can see that the whole industry is down, the whole industry being targeted by short sellers. So it faces a lot of issue right now. Well, after calculating all the assumptions and everything for the stock, I was able to reach out to a fair value for the stock. And basically, after doing the calculations of the discounted cash flow, I was able to see that the stock worth or fair value is $13.61. I'm gonna tell you in a second what the assumptions that I have made that to reach out to this value. And all right, but you know, like what we do usually, we have some cushion of safety. So let's slash this by 15%. So the target or the fair price for this stock right now, it's $11.54. However, it's trading around $5. So there's a potential 100% increase in this stock right now or the coming month. So this one thing I want to highlight again. So basically the whole drop, the 50% drop that we got recently saw in this stock in BNGO is basically because of the short sellers that they're not seeing the value of this industry, right? But however, the company's statement and the financials and the future outlook looks very positive. So when the Q1 earnings when Q2 or Q1 earning gonna show, we're gonna see some really things gonna change on the stock. So it might, if they were beating the estimates, they can see some boost. If they failed, then the short sellers will be doubling their bet on that stock. When I made these prices, which is $11.554, I had these assumptions in my mind. So I wanted an annual return of 5%. That's my personal annual return, 5% for the next 10 years. And I assumed that the analysts were right, and we have around 90% revenue growth until 2025. And then the followed rate of growth is going to be reduced to 67 and then reduced to 33 until 2030, right? And we are expecting a positive cash flow by 2024. Now the question remains, now, and when you dig deeper also, that you notice that the company's future looks nice, right? They have just hired a new VPs, right? They have a new financial CFO and a new chief medical as well. They have acquired another company which will leverage their system as well. They are expecting a dramatic increase of selling the Sapphire system. They're pending approval on a multi test that can be leveraged on Sapphire. So basically, there's a good future on this company, no doubt at all. However, you need to ask yourself, right? Does it worth the risk? Giving the whole thing, right, that what I gave you now, that it's still not profitable. It's expected to be profitable after 3 to 4 years. Yes, they're growing in sales, correct, but they have limited products, even though that they acquired a new company, which is a good thing. The whole industry is a new kind of industry. There's still no much solid. You can see all other competitors who have good revenues, they still did not profit, except Pacific California, and we don't know if they're gonna maintain their profitability or not. So there is a lot of question about the company, and I would like to hear from you guys. What do you think? Or are you gonna buy the dip right now or not? For me, I think it's a bit risky. I don't want a 5% annual return to get to my investment. If I'm gonna put my money in somewhere for next 10 years, I need at least 10% return annual. Otherwise, I'm not interested. It is still a new industry, and I think maybe they have, if they got after the earnings, like the next 2 to 3 quarters earnings, we are gonna have some visibility. Until then, thank you very much, and welcome to the Morning Business Brew. Would really appreciate a subscribe, a like, and a comment. And thank you very much for watching this video. Thank you. Bye bye.